Today's video where we're going to be looking at using an online platform, MetaTrader 4, and how we can enter trades into the live markets using order types, and then how we can calculate how much we're placing on a given trade using the lot sizes that are provided on the trading platform. So I will be assuming you will be using the MetaTrader 4 application, but if you're using the desktop, the same rules will apply. So once you download the application on your phone, you'll see the MetaTrader 4 application symbol. You simply press the symbol. When you get to settings, you will then log in using your login details, which you'll have from the broker. And basically, for an example here, you'll say log into an existing account, and then you're literally going to search for the broker that you want to log in with, and then you're going to enter your login details and your password. So guys, once you've logged into your MT4 account, and in this account, I'm going to show you a demo account so I can show you how you enter and exit trades, which is very simple and easy to understand, and you'll be ready to crack on when you want to start trading the markets with me or individually on your own. So once you open the platform, guys, you'll see in the bottom left-hand corner you have quotes, and this will be a list of instruments that you will choose that you want to trade. So you can click in the top right-hand corner, you see the plus sign, and then you'll be able to go and you'll be able to look at, for an example, Forex pairs, where you can choose which pairs you want to add. For an example, Aussie dollar against the Japanese yen. Or when I'm sending a trade, I will be telling you, for an example, I'm trading the pound against the yen, and if that's not already on your list, you can add it, for an example. And if you want, you can just add every single currency to make sure that you never have to search it, or you can literally come in here and search it at the top. So for an example, if I wanted to trade the US dollar, South African rand, for an example. Then we have indices, so like indices, stock market. So let's say you want to trade the French stock market, you can add that again, and it'll be added to the bottom of your list. So there's loads of different things you can trade. You can trade indices, we can trade metals, for an example, like gold, and you just have different subsectors where you can literally just go and have a look, and you can choose the instruments that are there if you want to trade it yourself. Or while I send a specific trade that I'm showing my members, you can literally search it here, and I'll give the symbol, and you search it, and you'll find it immediately, and you'll be able to then implement a trade using that trading symbol. So along the bottom you have trade, and this is where you'll have all your open positions once you've entered a trade. History is all the trades you've entered. So I'm going to show you some examples over a weekly basis, monthly basis, and then you'll be able to basically see your trading history over a specific amount of time. So on this chart here, guys, we have Euro USD. Now, when you click the top right hand corner, you can click which instrument you want to be trading, and you'll get your list that you had at the home page. For an example here, you press Euro USD. Now, you have different types of orders you can enter into the market. You have a market execution, you have a buy-in order or a sell-in order, and you have a buy stop order and a sell stop order. So let's just go through what this basically means. A live market execution is when you enter the live market and you get into a trade. So let's say, for example, I wanted to buy the euro against the US dollar, and I said to my members, all right, guys, we're going to buy the market right now at the live price, and I'll give you a stop loss price to get out of the market if the market goes against us and it's not losing money, and I'll give you a take profit price that I believe you won't get out of the market or you've made a certain amount of money. So for an example, if I said, guys, we're going to buy the euro against the USD at the live market, all you're going to do is enter the stop loss price that I'll give you. So let's say this stop loss price was 1.1600. You're going to type in 1.16000, and let's say the take profit price was 1.25 up here. You're going to put 1.25000, and then you're going to press buy the market, because again, we're buying the market in anticipation that the euro goes up against the US dollar. Very easy and straightforward to understand. But then here we have lot sizes. Now lot sizes is quite easy when you're trading currencies, because as you know, when they're trading money in the real economy is pounds and cents, or dollars and cents, and it's exactly the same here. So 1.00 when we train the markets. I'm going to show you what this basically means in a monetary value, but let's work from right to left. So 0.00. Obviously you can't enter a trade because you haven't put any monetary amount, but 0.01 is equal to 10 pence. 0.02 is equal to 20 pence, 30 pence, 40 pence, 50 pence, 60 pence, 70 pence, 80 pence, 90 pence. Sorry, 90 pence. And then we get to £1. And then we go back to 0.10. So £1.50 for an example will be 0.15, 0.16, 0.17, 8, 9 is £1.90, and then £2 will be like this for an example. And that'll work its way up until we get to £9.90, and then 1.00 will be equal to £10 per point that you're placing on a trade. So remember, guys, when you look at the Excel spreadsheet I'm giving you, it will basically be telling you a risk management calculation of how much you're placing on the trade, and then you'll have to come in here and you have to put it in here in terms of using lots. So let's say, for an example, you had a massive trading account and you could put on £11 50 per point. When you're trading the market, you'll then come in, you'll put 1.15, and that's equal to £11.50 when you're trading the market. So we could buy the market, and now we're in the live trade, for an example. Now, once you're in a live trade, you may want to close the whole position. You can hold your finger over the open trade, and you can press close, and you can choose to close of a loss. If you press close of a loss, that closes the whole position. But what you can do is sometimes you can look to close half a position. So you could come in here and you could say, I want to close half the position of £5.50, for example, and you'll be putting 0.55. And remember, it's £5.50. You can close that, and that will keep the upper half of the position open, which then you can go and open and then close the whole position if you want to. So it's really easy to open and go to trade. And if you're selling the market, you do exactly the same thing, where if I was to enter the market here and we want to sell the market to go to the downside, let's say our stop loss was 1.22, you would literally come in here and press 1.22. And let's say the take profit was 1.14. You don't put 1.14. You put your trade volumes. Let's say this time you can only place £3.30 on the trade. It would be 0.33. And that is equal to £3.30. So just remember, guys, when you go to one lot, when you're trading one full lot, is equal to £10 per point, or $10 per point, whatever it is the currency you're using as your denominated account. And then again, if it is 0 spot, for example, 7, then you know that's £7. And then the last decimal point is always equal to 10 pence. So £7.10, or £7.60, or £7.90, and then £8 once you go up. I love a 10 pence. So really easy to understand, guys. That is what a live market execution is, where you can buy or you can sell the market and get into a live trade. So this time we've sold the market, and again, we can modify the trade by closing half the position, or we can close the full position when we get into the market. So that is trading a live market execution. Now, what we can do is place buy stop orders or sell stop orders, and these are the two type of orders I will be using alongside a market execution. I don't personally use buy and sell limit orders, but you may look to, and I will explain how this works. So let's say we want to place a buy stock order. A buy stock order is basically if you wanted to buy the market, but we wanted the market to move in our favor before we buy, then we place a buy stop order, and this basically would trigger the market to enter a trade for us automatically once the price moves in our favor at a specific price. So let's say I wanted to buy Euro USD once it got to $1.20. 1 euro buys $1.20. Then I put in here 1.20 would be the price I enter the market. And then if, for example, my stop was down, wanted to be 1.18 for an example, that would be my stop loss. And let's say my take profit target would be up here at 125, 1.25. Now you would literally press place the order. And once you've done that, now the order is being placed, but as you can see, it isn't a live market order. It hasn't been traded yet, and there's no profit and loss because we hadn't reached that price yet. So that's how you place a buy stop order. A sell stop order is exactly the same, but this time, if we're selling the market, we're waiting for the market to come down to our price before it triggers. So let's say it's 1.16. We're going to put 1.16. Let's say our stop loss is 1.18. For an example, we put 1.18. And let's take profit. We're going to be down here at 1.112. You're going to put 1.112. And now you can enter that sell stop order in the market. So that's how you enter the trades differently for a buy stop order and a sell stop order. You literally just choose it at the beginning when you're placing the trade here. Now, a buy minute order is, let's say you wanted to buy the market, but you wanted to wait for it to drop lower before you entered the trade. That is literally what a buy limit order is. And it's exactly the same. You just put the entry price here. You then put the stop loss of, say, like it's 1.14. You put that here, 1.14. And let's say the take profit again, was it'll be 1.25 up here. You then press 1.25, final example. And then, guys, you literally then just enter the trade. And then again, you have a buy limit order that's now being triggered. And then a sell in order is exactly the same, guys. If you're selling the market, all you're doing is you're looking to sell the market once it pulls back a bit more before you enter the trade. So let's say we want to enter the market at 1.22 up here before we sold. And then let's say our stop loss will be 1.25 up here, 1.25. And then let's say our take profit will be somewhere down here, 1.14. Then we can literally place that sell limit order and it's there in the markets. So it's really easy to trade currencies. That is literally, in the nutshell, is very simple. And what I'm now going to go over is show you how to trade, for an example, commodities. So let's say we're going to trade Brent crude oil. Now, whether trading Brent crude oil, go to details, and it's going to say how much contracts we're trading. So the contract size is 1,000 contracts of Brent crude oil. Now, obviously, Brent crude oil is trading again in dollars and cents. So the current price of oil is 63.16. So 0.101 times 1,000 is telling you that one contract is equal to $10 per point that this move. So that basically means is if I come into this platform and I trade crude oil, if I'm trading one lot, this is equal to $10 per point when I trade this commodity. So just remember that, guys. If I want to trade $5 per point, 0.5, it's exactly the same as the currencies. For an example, if I want to trade £1, it is going to be like that. Okay, it's a bit different. Sorry, apologies. If I'm trading a pound, it's going to be like that again. So the last decimal point is equal to, the last decimal point is equal to 10 cents. And again, once you get up to 0.09, then you go to 1. That's equal to a pound per point or a dollar per point. And then obviously if you get up to £9.90 for an example, then it goes to $10 per point. So one lot is equal to $10 per point. The reason I was showing you the contract size is because some platforms have different contract sizes. So let's say, for an example, you're trading Brent crude on another platform. Maybe this is not worth 1,000 contracts. Maybe this is only worth 100 contracts. And then you would understand as 0.01 times 100 would mean that one lot is equal to $1 in the markets. And that'll probably be the lowest you'd have to trade. So it's really simple, really easy to understand, guys. And if we're trading a commodity like gold, let's say we can trade the gold against the US dollar. We can clearly see here, for an example, that when we're trading gold, we're trading 100 contracts. So 0.1 times 100 is equal to a pound per point or a dollar per point, for an example. So again, if I was to trade gold, it'd be exactly the same as the currencies. So for an example, 0.01 would be 10 cents. Again, 0.10 would be 1 pound or $1, and though 1.00 would be worth 10 pounds or $10 per point that the gold moves pricing US dollars. So it's very similar, guys, and it's easy for us to understand when we're trading all the different instruments. So now you understand, guys, how to navigate the platform. Again, we have market executions or buy sub orders or buy and sell limit orders, but I personally only use market execution and buy and sell stop orders. So you won't really have to worry about me sending you a limit order but you understand how it works. It's very easy to understand. It's just the lot sizes now I really want you to pay attention to, so you don't start taking too much of a bigger position in the market. So, hope that makes sense, guys. Thank you for watching. And that is position size and order types. Thank you.